I hope you're having a wonderful holiday season wherever you're watching this week's Bullion Market Update. We are going to begin this week by taking a large look around the world for where gold and silver have been trending to end this year, 2024. In the second half, we'll look out at some of your opinions and the opinions of other market analysts to get a sense of what could be in store for monetary precious metals in the year to come and beyond. Let's start with a general view of how gold and silver have been trading worldwide, indexed to 2010 GDP market share, using the largest 20 economies and their respective fiat currency values versus each precious metal ongoing. In a bullion bull market, gold leads. And gold's breakout leadership in this chart is very obvious. When we see silver's ongoing relative fiat price action according to this 20 leading economy GDP weighting, we can see we're already pumping up against old, seemingly ancient price high levels from 1980 and 2011. If you've been paying attention to sentiment in silver of late, you'll know it's frozen, partially in the trash, with disappointment having now fallen below its 200-day moving average. This is perfectly normal. Silver is an emotional market. There's a baton that gets passed between euphoria and depression amongst market participants. Onwards to key markets and their annual price performance wicks. If you don't understand how to read a price chart wick, just press pause here and stare at this image for a minute. In the USA in 2024, there was a brief retest of the $2,000 an ounce support level for gold to start the year. It was followed by spot gold going on a near $800 rise. Basically been in a consolidation range ever since. On the year, the fiat US dollar has lost over negative 25% of its purchasing power versus gold bullion. On the silver side of the equation, the fiat US dollar has lost just under negative 25%. So a similar story, mirroring gold, with silver running from March until late October. Spot silver ran from 22 to nearly 35 an ounce in that time frame. How large a red or blue bar next year? Like I said, we'll get into those guesses shortly. The spot gold silver ratio was a tale of two halves this year, falling to the lows 70s by late May, only to have retraced back to nearly where we started the year, up in the high 80s again. The fiat euro gold price has risen nearly 35% this year, or more succinctly said, the fiat euro has lost negative 35% to gold this year. Silver, the fiat euro has lost negative 32% this year. Again, mirroring gold's strength, but not outperforming it yet. The spot gold price in fiat pounds, not sterling, is down negative 28.5% on the year versus gold, and down negative 26% versus silver. And you can see their price is already higher than the old ancient 1980 high. The high from 2011 could get passed in due course. Off to the Eastern world, Chinese gold is down negative 30% on the year, with silver down negative 28% on a chart that looks like it's ready to start running higher, with more blue bars to come. The gold spot price in Switzerland is down negative 36% locally on the year. The silver is down negative 33% on the year. And I know the Swiss silver chart here, it looks crazy. The current local Swiss silver price still has to not only triple, just to reach its old 1980 nominal price high level. And that is with fiat Swiss franc gold prices already broken out, making new nominal record price highs persistently. So, we are still very early in this bullion bull market. Swiss silver blowing beyond its seemingly ancient 1980 high is inevitable. It's only a question of exactly by when and under which conditions that comes about. Fiat Aussie gold is off and flying high, with fiat Australian dollar having lost negative 38% to gold on the year. Silver down under is down under no more on the chart. It's likely to finish this year priced higher nominally than any price prior. It's basically a forewarning of silver price breakouts to come everywhere in the world in time. The fiat Canadian dollar has also been losing big time to gold and silver in 2024, down negative 38% and negative 35% versus each monetary metal respectively. And finally, another major market in terms of both physical gold and silver demand, the fiat rupee has lost over negative 33% versus gold thus far in 2024 and has lost negative 31% versus silver on the year. I would suggest you look for more silver investment demand to come from India in 2025 as local buyers attempt to make gains versus gold on a relative basis to come. On the other side of this short break, we'll get a view of what hundreds of you all are thinking is in store for next year, and we're going to take a look at just how delusional some stock market bubble participants have indeed become. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates, and be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
Make some room in your safe because a whole lot of silver could be coming your way. SD Bullion's Monster Box Sweepstakes is back, featuring 500 of SD Bullion's very own Silver Tree of Life coins in a monster box for the first time ever. This stunning silver coin is a highly detailed masterpiece featuring a hidden inscription on one of the tree branches that changes every year. So put on your best flannel and become one with the forest, and take your shot to win 500 silver trees from SD Bullion, because someone's gonna win it, so why not you? Click the link below for your chance to win.
The spot gold silver markets traded slightly down on this holiday shortened week. The spot silver price closed at $29.34 an ounce bid, and the spot gold price finished at $2,618 an ounce bid. The spot gold silver ratio moved higher to finish at 89. In terms of professional precious metal analyst viewpoints for next year, I've been scanning the internet for the last few months. It seems the bullish consensus remains around $3,000 an ounce being the target high next year. Many bulls are calling for another time frame where the spot gold silver ratio tightens back towards the lower 70s, and thus calls of silver running up to $40 an ounce next year are becoming pretty common. These are the spot price ranges that Swiss precious metal refiner Heraeus publicly published this week. Ole Hansen of Saxo Bank echoed these calls for $3,000 an ounce gold, a tightening gold silver ratio, and $40 an ounce silver as well, possibly next year, 2025. On the key diluted stock market bubble side of this investing world equation, the United States is essentially now half the global stock market. And I simply put out a poll asking by when, if ever, the nominal S&P 500 will again reach one-to-one parity with the spot gold price. For about half of financial history of the United States, the S&P 500 divided by gold ratio has been below 1, not above 1 as we currently are now. I believe we're around 2.3. It last occurred in the late 2000s and early 2010s, just following the global financial crisis. To my surprise, about 1 in 5 of the 100 polled answered the question and saying that it was never going to reach parity again. Yeah, no more parity to come forevermore. So yes, we live in a world in which recency bias clouds people's judgment into using terms such as never when discussing what can happen in fiat financialized markets. You might see this chart and data showing how now only 10 companies account for 40% of the S&P 500, and perhaps delude yourself into thinking that's strength. I would argue it is passive investing lunacy that will learn the hardest way in real terms if it stays cornered and crowded in those bloated names for too much longer. And while there's going to be seemingly endless market interventions to come, long-term real value charts using the hardest monies as the objective measurement suggest the old 2011 lows of the S&P 500 divided by gold and the S&P 500 divided by silver are going to be met again, come what may. That's going to be all for our weekly SD Bullion Market Update. And always to you out there, take great care of yourselves and those you love.
If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.